Hello and welcome to Canada Finance, your one-stop shop to cop a sweet bag of profit here in Canada. In this video, I will be going over the strategies I use to keep my Tfsa consistently profiting by doing a weekly analysis on every stock in my portfolio in order to determine what it needs to be cut loose and what I might want to invest more into. And at the end of this video, I will be covering my top picks that I will be putting into my Tfsa this coming week. So I comb through my Tfsa and see if there's any stock that I'm currently losing more than 5% of my buy-in. This is because if I have a stock that pays a dividend that is below the losses that I have, then I would definitely consider selling. If I have anything over 10% losses, I should be selling. With stocks in your Tfsa, it is quite the habit to be hoarding stocks and never selling. The problem with this is you may feel like you are getting your money's worth because of a dividend that might pay 1% monthly or 5% annually, but overall, regardless of that dividend payment, if your stock is not growing or at least sustaining its current price point, it could easily cause your value of your Tfsa to go down, especially if it is reducing dividends. Even though the percentage of your dividend may not change, the lower your stock goes as its current value, the lower your payout of that dividend will be. What I look for in a consistent stock for my Tfsa is something that remains consistent. This is something that I can justify selling if I ever have a larger growth opportunity, and something that I know is secure and pays a nice dividend. CDIV is a dividend-based ETF created by Manulife Financial. This has only been in creation since November of 2020. However, in that time frame, it has never dipped below $10. This stock has never dipped below $10. It does have a fairly small dividend payout rate. However, if I want to secure up funds while I wait for another opportunity, it is better to take that and put it into a dividend like CDIV, so then I am secure that this will not drop, and only the growth and the dividend will continue to pay out, and I can easily have no problem selling that dividend fund, as I know I've currently benefited from it through its dividend payments, and I have barely lost anything through its general stagnant growth or decline. This active money strategy allows you to make sure that none of the available cash in your Tfsa is at risk of doing nothing, when that big stash of money could easily just be making small amounts of passive income before you find an opportunity. Shopping for dividends and ETFs can seem a lot like looking through Netflix, where you just kind of surf through over and over with numbers that are relatively the same, ratings that don't quite mean anything, and a lot of different problems that you run into trying to find the most secure place to put your money. The first sector that I would consider putting into my Tfsa is real estate. These are REITs, R-E-I-T. What I do when investing in REITs is stay within my local area. I know what parts of my province are developing, and I understand which towns and communities are creating a boom in their own real estate venture. If you notice that a real estate company is providing a majority of the sales in your area, then you can see that as a secure investment for yourself to invest, one, in your local economy, and two, it would be very easy to keep track of, as it's very easy to stay up to date on local companies within your area, as you may even know somebody who currently works for them. After that process, I would like to look into ETFs. Every time that we have a disruptive technology or anything that is creating a lot of smaller companies to produce a similar product, we have an ETF created. Emerging ETFs invest a large quantity of money in the emerging markets. This stimulates the growth of these companies. As well, it helps you understand which companies are being believed to come out on top. So even if you do not invest in these ETFs, you can look at the list of companies that this ETF is investing in to figure out where your top picks should lie. Two emerging ETFs right now are PSYK and HMMJ. PSYK is looking towards psychedelics, so it is investing in companies like Numi and MindMed. These companies, as well as many others, are projected to have a much higher growth over time, but it is difficult to say which one will come out on top in terms of the competitive nature of these companies. It could be very possible that this competition could even out completely, with multiple companies taking up a decent share of the market. However, investing in an ETF like PSYK will help to smooth out the peaks and valleys, so then you can have a more consistent growth portfolio while investing in a market that you believe in. HMMJ is a cannabis ETF that invests in many of my favorite cannabis companies, and it does a very good job of providing a dividend. It recently reduced that dividend. After the reduction in dividend, it restructured and allowed itself to have significant growth, essentially canceling out the dividend. It went from $11 all the way up to nearing $18 and now falling towards $15 after the crash of the cannabis boom. This is a far lower fall than you have seen from APHA, FIRE, and HITI cannabis, as on Friday that week, most of these companies had dropped 20 to 40%. When picking an ETF, pick an ETF with a disruptive technology that you believe in, understand the players in the market, and see and watch for those news articles. If you have an ETF, it is very nice to be able to look into the companies that they are investing in, so you can have a little bit of their play on your side and invest in some of the companies that they also trust. And getting into companies that are purely for dividends. So when you have a company that is purely made for investors, specifically for dividend, what a dividend is essentially a share of the profits based off of the shares that you hold in the company. Rather than a company having consistent growth as it reinvests into itself, it pays its shareholders based off of the profits that they have made using the money that the shareholders have invested. My top pick for a dividend company would be Fortis, FTS. It has barely ever changed or decreased its dividend fund. It will consistently raise over time, and it has been a very safe investment for myself. APR.UN is an incredibly priced automotive dividend. It is consistently growing between $1 and $2 as well over the course of the years. It generally has been fluctuating between $10 and $11 recently, and it has a dividend of over 7%. That will be 80 cents per share. The highest dividend paying stock on my list is SGR.UN with a 13% annual yield. This sounds fantastic with more than 1% per month gain. However, these high dividends will not last. The price of the stock is up around $11 Canadian, but the 13% high dividend is mainly because of the Canada wage subsidy that allows this grocery store chain to be able to not entirely pay its employees up front, as it will be currently subsidized. As well, there is a higher demand for local small grocery chains right now because of travel restrictions that will not allow people to move far from home. As the pandemic winds down, these subsidies will be reduced and more people will be flocking towards Costco for bulk purchase deals. TEC is a technology global leaders ETF that has been on a constant rise over time. This is not investing in disruptive technology, however, it is investing in technology that is here for the long term. These are mainstay companies. Sorry about my cat's tail. Cat, do you want to be in the video or not? TEC, the tech ETF, is a company that allows you to invest in very stable technology in all of the companies such as Nvidia, Apple, Microsoft, and so on. So you catch the rises and falls of these companies, but you have more security in knowing that it is a diversified portfolio of technology. SIS, Savaria Corporation, is a stock with only a 2.79 dividend yield. However, it is a growth stock that has been going up fairly well. Recently, it started going down after it hit a high closer to $18, but it will be a very good pickup at near the end of this week once it gets closer to $15. In a similar boat to ones that are currently on their way down, which would be a good budget buy right now, would be Park Lawn Corp. It is currently priced at $30. However, this is a company that is working towards crematoriums as well as funeral homes, cemeteries, and so on. Given the higher death rate, I suppose, you could be betting on right now, which does not sound ethically fantastic, but the way that they are preserving these bodies and understanding the people who have been passing on, it is not necessarily right to capitalize on it, but somebody has to. I wouldn't invest in Park Lawn Corp just to say that you are betting on other people's death. Say that you are investing in Park Lawn Corp because you want to invest in the future of preserving the life that was lived. So those So those are my long-term holds for this week in my TFSA. So these were my long-term picks for my TFSA, as well as doing some TLC on your TFSA by cutting out some of these losses. So make sure you are selling anything that is giving you more than a 10% loss, selling anything that has continued to lose past 5%, or anything that is losing more than the current dividend yield. After that, find something that has a consistent growth or stable trend and put that into your TFSA as an opportunity for growth or a stable place to put your money while you wait for the next large opportunity. This video would have come out yesterday, but I was swamped with calls from my patrons, which thank you so much for supporting me on Patreon. If you haven't already, like the video, subscribe, and I'll see you next time.